Just in time for the weekend dedicated to giving thanks. There are more signs tonight. The economy is on the rebound. The Canadian dollar is up past the 95-cent mark. The Toronto Stock Exchange gained ground this week, and unemployment is down, with BC leading the country in job creation. But there is a potential cloud in the silver lining if the recovery happens too quickly. We have two reports.
When the world financial markets collapsed last year, BC's building boom got hammered. Jobs were cut, and here at BCIT, construction students were suddenly forced to take a measured look at their career prospects.
Lots of the first-year guys were really stressing that they were going to get laid off.
But it was definitely scary for times. Yeah, I have kids.
We were laid off right before, and luckily I got into BCIT to do my apprenticeship early and have followed through with my second year right after my first.
But when you drill down into the jobless numbers released today, there are more signals that the economy is in recovery.
When we see the improvement in the labor market, that's usually a very strong sign that the economy is improving, and in this case, that the recession is coming to an end and recovery is either here or shortly will be here.
The Canadian economy appears to be recovering sooner than expected. In the U.S., massive amounts of jobs are still being shed, but in Canada, the unemployment rate actually fell for the first time since the recession.
According to Statistics Canada, the unemployment rate fell to 8.4% last month, a drop of 0.3 percentage points. More than 30,000 new jobs were created in September. Of those 14,000, nearly half were in BC, the largest job gain of all provinces, knocking our unemployment rate down to 7.4%.
Well, we are, again, in a transition phase from recession to recovery. Conditions are improving, so we can take some optimism from that and some greater levels of confidence.
And that confidence is already spilling over into certain sectors. In BC, manufacturing, finance, and construction are helping the economy move out of recession.
Looks like things are going to start to pick up again, and everyone should stay fairly busy.
I feel a little bit of relief, yeah.
I'm not worried. As soon as I walk out of here, I'm going to be walking into a job of some kind.
And even if the economy is only in the early stages of recovery, the job market numbers are something to build on.
It was another busy afternoon at the Peace Arch border crossing where a lot of British Columbians were heading south for the Thanksgiving long weekend. But this could be the beginning of a new wave of cross-border shoppers taking advantage of the rising Canadian dollar, which today reached its highest level in a year.
A lot of what's going on is not dollar strength or euro strength or Australian dollar strength, but it is weakness in the US dollar. But then on top of that, you take the strength that's coming back in commodities, and then that gives the Canadian dollar an extra push.
The Canadian dollar has been on a tear against its American counterpart, rising 20 cents in the past 6 months. Back in March, it reached a low of 76.5 cents U.S. and has essentially started climbing since then, closing today at just under 96 cents U.S. And it's not just the dollar. The equity markets are also showing strength. Although the Toronto Stock Exchange saw its first loss in 5 days today, it finished off its first positive week in the last 3, with the TSX Composite Index up about 4.5%.
The stock market right now is traditionally pricing in the 5th year of a recovery, and we're only 6 months into it. But that's what it's telling us, is that the market is trying to tell us that this recovery is going to be very robust, that there's going to be more to it.
And it seems government stimulus packages are getting things going, perhaps too well. There are concerns that the economy may be heating up much quicker than many analysts had expected. And with all this rapid growth, there's worry inflation may start to rear its ugly head, forcing a hike in interest rates to cool things down.
Could the interest rates now start to move up, even contrary to what the Bank of Canada has said? They didn't promise. They just said they were going to stay down. If they see this inflation, if they see the economy picking up, it is no doubt in my mind that the interest rates from the Bank of Canada are going to head up. Higher consumer loan rates, higher mortgage rates.
And ironically, higher interest rates could boost an already skyrocketing Canadian dollar, with some experts predicting the loonie to reach parity by the end of the year.